Hi guys, what's going on? How has been your trading week? In this video I want to show you the exact strategy I'm starting with when I'm trading gold. A simple step-by-step process. Every trader wants the perfect strategy, but here's the truth: the perfect strategy doesn't exist at all. So instead of chasing perfection, I built something simple, something personal, something that fits me. This is the strategy I'm starting with. It's not perfect, but it's mine. I used to think the more indicators I added, the better I would trade. RSI, MACD, moving averages, and many more. And one time, I added an indicator I couldn't even pronounce. It was called Ichimoku, something like that. And guess what happened? I got even more confused. Then I learned something powerful. Simple strategies are easier to execute. Simple strategies are easier to trust. And the best part of all, simple strategies survive chaos. Gold moves too fast for overthinking. So I simplified everything. Let's jump straight to the chart and I show you exactly how I approach the market. Let me first clear off all these things on the chart. Let me first take out all these period separators. F8, show period separators. Okay, remove these ones. Tap OK. So this is the clean thing. Now, my strategy starts with 3 core principles. The first principle is the market structure. It's very important to know where the market is heading, where the market is going. Market structure. How do you know the market structure? If price is creating higher highs, higher lows, if price is creating, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows, that is an uptrending market. And the opposite is true. If the market is creating, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, that is a downtrending market. If there's no structure, guys, there is no trade. If there's no structure, don't force trades. Now the second principle in my strategy is, after identifying the market structure, you're going to identify what we call key levels. Key levels. Key levels. Key levels. Now, those key levels could be, support and resistance. Let me show you support and resistance here. Let's say in an uptrending market. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So the key levels here, we could be having support and resistance. We could be having this resistance becoming support, resistance becoming support, resistance becoming support. Or we could have supply and demand. How do you identify supply and demand? Here is supply and demand. This is demand. This is demand. And this is demand. all these zones here. Because these key zones tell me exactly where price reacted. That is where I'm gonna become a buyer here or here, here or here. As simple as that. Nothing is complicated, guys. Nothing is complicated. And then let me first clear off these ones and I show you the third principle. The third principle is called momentum. Yes, momentum. So we are going to wait for a break of structure. Okay, in this example I'm giving you an uptrending market because usually gold is uptrending, so that don't blame me for that principle is momentum. So with momentum you're going to wait for price to break structure. For example, it's giving higher highs, higher lows, higher highs, higher lows, higher highs. So this is a break of structure. Once price breaks this structure right here, that is when you're going to wait for either price to come back and retest this zone that broke, or when it comes back to this demand zone right here. That's when we shall become buyers. So that momentum, there should be an engulfing move, like impulsiveness, when price shot up and you wait for price to come back on this very zone. As simple as that. Don't complicate trading, guys. These are the only three principles that I work with when I'm trading gold. First and foremost is market structure. Where is the price going? Is it creating higher highs, higher lows, or lower highs, lower lows for an up for downtrending market? What are the major key levels you can use? Support and resistance, or demand and supply? What is the momentum? How do you confirm when to enter and when not to enter? If there is momentum, that's a good trade. If there's a break of structure, that's also a good trade. If there's none of those ones, chill, bro. Don't force trades. I'm telling you, don't force trades. Now I'm going to show you my actual setup. This is my bread and butter setup. As I told you, first and foremost, you should identify the market direction. Please identify the market direction first. If you look at gold, this is the H1 time frame. Yeah, you can use this one to identify the direction, or you can use the daily chart, but I prefer to make things a bit simple for you guys to understand. So as I told you, the direction is most important. So if you look at this chart, price was creating a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. It failed to make new highs, but still it never broke this structure down here. Never broke the structure. To continue to create new highs, that means we are still bullish. We are still bullish because price is not breaking this zone right here. This one that you're seeing here. So what do? We look for buys. Never look for sales in an uptrending market. Don't counter trend. Don't try to catch a falling knife. Just make things simple for you. Let's clear these ones off. Okay, there we go. Now, since price was creating a series of high highs and high lows, that means we are in uptrending market, so we are looking for buys. We are looking for buys. So first thing first, we mark our zones. If you look at this chart, the only zone we had here was this demand zone right here. We had this demand zone. Let me make it a bit longer. Yeah, we had this demand zone. I had this demand zone right here. So we are going to wait for price to come back on this demand zone. That's when we shall become buyers. Or We also have this zone right here. We're waiting for price to break out from here. If it breaks out from here, if it breaks out from that zone, we wait for it to come back and we become buyers. So you're going to buy from here, or you wait for it to break this structure and then we become buyers. This is how it is going to be. That is a higher high, comes back, makes a new high, so it breaks this structure. When it breaks this structure, you're going to wait for price to come back on this zone. Price to come back on this zone, this one. That is when we shall become, that is when we shall become buyers to the upside. As simple as that. You see, there's no complication here. As simple as this. So we are waiting for price to, if it breaks this zone, we wait for it to come back on this exact zone. That's when we shall become buyers, or we can buy from here. But in this case, let's see what happened. It broke structure. As you can see here, price broke structure. Price broke this structure right here. So we're waiting for price to to come back and retest. That is when we shall wait and become buyers. Boom. You see, it came back. So what do we confirm with? We first wait for price to clear liquidity. So you see, when it came back here, we never bought immediately. We waited for price to come and grab this liquidity you're seeing here. This is called a liquidity grab. This one right here. That is when, after grabbing this liquidity, that is when we short price to this upside. As simple as that. Nothing is complicated, guys. Nothing is the same setup I've given here. It's the same setup that actually happened here. And you see where gold is still even going up. It is still going up. Simple as that. Still going up. Guys, don't make trading hard. Trading is very easy, very effort. This setup fits my personality. I am patient, but when I hit hard. I wait for manipulation to finish. I wait for structure to shift. In simple terms, I don't chase and I don't guess. This strategy gives me confidence because the risk is very small. The entries and exits are so clear. The rules make sense. It works in both trending and ranging markets. It forces me to wait, which was my biggest weakness. Once you understand your triggers, gold becomes way less stressful. I am not perfect with this strategy. Sometimes I still enter early, force trades, ignore my levels, get emotional and overtrade. But every day I'm improving. Every mistake is part of the journey. Gold doesn't care about feelings, but it will reward discipline and consistency, my friend. Be consistent. Try to be consistent as much as you can. This strategy is my starting point, not the end, not the final form, but the foundation that I'm building on. It's very simple as you've seen it. It's very clean. It makes sense. And most importantly, it fits me. So if you're watching this video, thank you for being part of this journey. More episodes are coming soon. Let's grow together one step at a time. It's your boy Kevin, aka GTradingX. I'll see you soon in the next episodes.